Good morning, good afternoon, and good evening, Alpha Traders. Here we are for your next episode of Crypto and Clown World. Are we in Clown World? Oh my goodness. Absolutely 100% fully in Clown World right now. So what's going on with Bitcoin? Bitcoin's being pretty damn resilient. Did it dump today? Yes, it did. Where did it reject from? It rejected off the bottom side of the weekly range. Any of you Catalina whales out there watching, you go look at my post yesterday. All right, go look at my post yesterday. Maybe you guys will start making your way over to this Discord. All right, links in the description. Let's see. We opened up today though. Bitcoin rejects off the bottom of the new daily range. When I saw the center of the daily range at the top side of the 68.3 Laplace distribution, I was like, this is going to be interesting. I thought we were going to reject there. All right, Bitcoin had other plans, started using that area as support when it dumped right here. Came down to that 4-hour first standard deviation, bounced up. That's where the bears were defending. All right, that's where those bear algos kicked in, rejected price action within about 3.5, 4 hours. Whoop, baby drop, 34, yeah, about $2,300, $2,300. And it was I was waiting for pre-market to open up. Let me check something real quick. So I did not look. Let's see a SPY. Yep. No, it didn't. So Bitcoin had a little fake out there in pre-market, started climbing to the top side. You can see where SPY's new weekly price action volatility range is. Right here, hasn't really been tested yet. And here's what I'm saying. Now, if we would have got a couple bullish 15-minute candles, even trying to go towards it, I'd be like, that was a test. This thing just dumped out immediately. Where did it go to? Where did price action for SPY close today? Right at the S2 of the new weekly price action volatility range. Very interesting. It was right above the 95.4 Laplace distribution range as well. So that was definitely a good area, right? There was a 95.4% chance that SPY data set was not going to close below that area. And it just so happened that support level for the weekly price action volatility range was right above it. I'm going to be watching NASDAQ today, the rest of the day, throughout the night. If you see NASDAQ start to pull back or pull back up to the top side a little bit, I wouldn't be a bit surprised if SPY makes a run before dumping further, goes up to test this weekly. But at this point, you're literally going to have the new daily price action volatility range below this weekly S1. So, hey, guys, I mean, let me see here. So price got up to 431. I mean, I've seen a test. The problem is you want to see at least an effort to go up to it. That never happened. It just dumped out. It just dumped out. So I'm not going to even call that a test. If that would have been just a tiny little 15-minute bullish candle, I'd be like, okay, weekly got tested, SPY's in deep shit. But considering that did not happen, not too worried about this either, because we got this wick up during a Friday. Let's see, let me look back in this price action last week. Oh boy, traditional markets are ugly. Very ugly. Let's take a look at NASDAQ real quick, and I'll get back on the Bitcoin. They're right here. 0500. Yes, I believe that's when Bitcoin, right? Bitcoin and NASDAQ pumped up, both of them, to the daily. Let me see real quick. Let me go back to Bitcoin, then I'll go back to SPY. Actually, when Bitcoin was testing the bottom side of the weekly, NASDAQ was testing the bottom side of the daily price action volatility range. That actually got a wick to the center. Right there. Both of them at the same time, then started to reject. All right, then started to reject as the traditional markets opened up. Wow, same thing. You know what? These look real familiar. Look where NASDAQ's weekly is, right? NASDAQ's weekly was right at the top of the daily. So it looks very familiar. Look where NASDAQ's at right now. Exactly where SPY closed at its weekly S2. It's that green dotted line down here. Tell you what, if NASDAQ can stay above here through the rest of the evening, going into tomorrow's opening, these babies might go up a little bit tomorrow. But I'll tell you what, if you see NASDAQ get down here around this monthly level, this green cross line, maybe even come down here, test a 3SD, right? Or hold on, let me see something. We're getting this closed in a couple hours. I want to see where the new daily price action volatility range is. Probably going to be down here. It could be below this 1SD. If that happens and NASDAQ rejects off there, comes down to this monthly, you're probably going to have right around here is going to be the 1SD. So throughout the night, if NASDAQ breaks below its 1SD, SPY is going to open up shitty, I would imagine. So 997. Okay. It's actually 2, right? You're going to look. That white cross line right there, that's a 95 for Laplace. So the 95 for Laplace on NASDAQ and the S2, very similar to SPY. Boom. 95 for Laplace, S2 on the weekly. So those babies are looking very familiar. Probably highly correlated. Let's take a peek. But let me pop back on Bitcoin. Ding. Yeah, here's Bitcoin's 95.4 down here, right? 95.4 was way down here. Let me squish this up a little bit. There's no weekly. S1 down here. There's the weekly S2. So while traditional markets are already at their weekly S2, Bitcoin's being resilient as hell. I'm going to go out on a limb here and saying this correlation's probably breaking. Let me pull up, whoops, no. Let me pull up my base chart here and pull up a correlation. Boop. Come on, you. Give me a Pearson correlation. Okay. Give me a second, guys. You going to the hell? Save this first. Okay, this thing's being a pain in the ass, so I'm going to reload it. I think I was too quick on it. There we go. Pearson correlation. Boop. Okay. Bitcoin. Yeah, you can see the slope right now. All right, this last 4-hour candle on BTC is going up. All right, look at it sloping down, losing its positive correlation with NASDAQ. That's expected. If you see this correlation break below the 0 threshold, let's see what SPY looks like. Yeah, losing correlation too. Right, but NASDAQ's still cooking. But it's losing correlation big time. I would like to see them lose correlation, to be honest. For all you Bitcoin lovers, it's going to have to. Because I think traditional markets got some pain coming as the world conditions are just shitty. Shitty, which is usually good for Bitcoin. Inflation, all this crap. I mean, if people are getting out of the market, where are they running? Where are they running? Into the US dollar? Doubt it. I doubt it. But at the same time, people got to pay bills. All right, that's enough of that. Oh, I erased the wrong chart. Boop. Yep. Okay. Let's go over here onto the ultimate power mean real quick. Yeah, 4 hour tried to break back up above this 9 length variance log moving average here. Boom, 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 boom. Big dump. Big dump. Let's see here. It'd be good for Bitcoin to get up close today above about 38.4. Yeah, it's at 38.402 is where that variance log moving average is. That would be good. Close about $400 higher than where it's at right now. Go to a 12-hour. Wow, what a volatile candle. Trying, right? You look how these two 12-hour candles, right? These two 12-hour candles, we're definitely getting some support on this reverse fissure. Got a wick below here. Boom, pulled back up. This is a very volatile 12-hour candle. 38,050 is where that fissure is. Definitely want to close the day above there. Close this 12-hour candle below this fissure. Usually when you do that, I mean, you're going to get a nice little flush out until the bulls can pick up back up. See a daily. Where's the daily at? Yeah, daily's way down here below. I mean, below the power mean band and everything. Going into the end of the day here, the bulls are going to have to pick this up, or this is going to not be very good for old Bitcoin. Let's see. I mean, we get this, look at this beautiful 2-day candle. Closes above the reverse wave trend. Go Bitcoin. Hell no. A 3-candle freaking backfill. Look at that. That's incredible. Holy shit. When's this close? Today, right? No. Yes. So we're going to get a new 2-day candle today. Oh boy. Closing below the power means. The freaking wave trend is, I mean, literally up here at almost 44K. And we get a 3-day. Yeah, this is ugly. Same thing with the 3-day, right? Remember when I was just jocking this 3-day candle, saying, hey, that 2-day doesn't matter. 2-day looked bearish. 3-day, 5-day looks great. And then this candle, boom. But look at the 3-day. Rejected right off the reverse wave trend. Now, boom, here we are. Ugly 3-day candle. We get a 3-day today as well. So we get a 2-day and a 3-day candle today. Let's go to a 5-day real quick. Oh boy. I tell you what, man, if this 99 length variance log moving average breaks, not going to be good. Let's see. The 11th. Yeah, we still got some. Literally just got this 5-day candle. If this 5-day candle can stay above, you know, this 36.5 region, 36.352 is where this 99 length's at. It'll be okay. We can get a wick below. You can see the last time, right? We've got this wick below. Pulled up. Open this candle. Boom. Perfect wick to the 99 length. Then pulled up. But the same thing as the 3-day. The 5-day is rejecting off of the reverse wave trend. Let's go to my favorite chart here, right? See what's going on. How many times are we going to reject off the mean of this projection from the 41K low? Right? How many times? Couldn't get by, couldn't get by, couldn't get by. Last week's candle could have closed a lot worse. Me and MJ were literally talking about it. If it would have closed down here underneath under 37 and created a very bearish gravestone doji, I mean, this is definitely not a very bullish candle, but at the same time, it's not as bad as that if that would have been a you know, a pink candle down here. Got a nice doji right now on the weekly. We literally already tested the 68.3 Laplace distribution range. That's that pink dot right there. We exceeded it by about $150. Tell you what, this week Bitcoin better get back up in this projection. right? This is the 68.3 Laplace distribution projection. What's that at? We're talking 40K. Bitcoin needs to get back up above 40K this week for sure. Let me see something. Let's move this projection to where this baby started dumping. Let's see where we're at. 17 bars. Get the peeky poo here. Yasha posted a nice video, took out of the Friday stream about my little rant. I popped it on when I was getting out of, waking up this morning. I was like, oh, listen to it. It was just like, Jesus, Bilbo. I didn't realize I ran it that hard. Let me see. Yeah. I mean, literally this week already. This thing, I mean, we've got a doji right now, literally in between the 68.3 Laplace distribution level. 100%. Look, top side was 39.6. 39.552 is the high so far, right? We literally, just today, ranged in between the 68.3 Laplace. Boom, boom. And that is the 68.3 Laplace on the daily. I mean, on the weekly, sorry. So, surprise, surprise. We break to the bottom side of that area. If Bitcoin closes a candle, a daily candle below, I'm going to go out on a limb. I don't just want to wick. If Bitcoin closes below 37K this week sometime, we're definitely going to probably push to a 1SD, right? We're talking that's 35K. And right below there, though, you have this 95.4 Laplace distribution projection, right? So that's going to be a nice little support area right there. You get a daily close below that 35K area, we're probably going to make a run down here. Although I'm looking right now, look to the top side. The bottom side, there's a little range here between the 95.4 Laplace and the second standard deviation. Look at the top side. They're right on top of each other. Literally within about $70. 44,898, 44,830. So it's definitely calling for a move to the top side. How volatile of a week is this going to be? You go over here onto the VRE. Last week's weekly range, super tight. Super tight. And what happened last week? Let's pull this last week in. This proves our point at Alpha Trading how this indicator works. So you get this tight weekly range. And when we got that, I said, hey, Bitcoin's going to trend. We're going to have a trending week. Did it? Hell yeah, man. Trend to the top side, trended right back down to the downside. And I remember on Friday, I was like, even on Thursday, I said, the top of this weekly range is going to get tested. As soon as the new weekly opened, that's when you got the test right there. It was about 2 hours behind schedule, but it did finally get tested, bounced up, tested the bottom side of the new weekly. So now we're working a $2,000 weekly range. Probably going to get more of a ranging week. I'll tell you what right now, this could really drive people crazy. This thing decides just to range in between the 68.3, or hey, maybe it runs down to like above 35 and then runs back up to the 1SD or to the 68.3 to the top side. From what I'm seeing, this week, Bitcoin's probably not getting over the 68.3. It's probably not going to do it. If it does, all the power to the Bitcoin bulls. Let's go. Let's see what you got. But remember I talked last week how I was impressed with Bitcoin, right? Especially we got up above, when we were up above the weekly and the monthly range. We had all that volatility below BTC's data set. BTC said, no thanks. Now look where it's all at. It's above us. This is going to be hard to get through. And I'm telling you, the bears, they are going to defend this 39.4 area like you would not believe. They do not want the bulls to get in this weekly range. They damn sure don't want them to get up inside the bottom of the monthly, a little over 40K. It's going to take a lot of something special for these bulls to get BTC above either one of the bottom of those ranges. BTC could be a little trouble here. This could be a little bit of a fake out, giving the bulls a little bit of hopium, maybe get one more rejection. The first things first, the new daily price action volatility range, BTC is literally right at it right now, probably. So these bulls are going to want to close up here, probably around the bottom side of the daily, and that'll give them a little bit of gusto to maybe push up again to the bottom of the weekly or monthly. This data set, though, has got to close above where the new daily is going to be at. If it closes down here around the bottom side of the 68.3 Laplace, right, and the daily S1 that's right there, it's going to be below that new daily range. Probably going to use that to reject to move to some lower levels. Probably first this monthly range right here. And what is that? That's a monthly S1. Here is the weekly S1. So there's a nice little support level here for the weekly and monthly volatility ranges. We could get a wick down to the weekly, 35.5 area. We could range in between 35.5 and 40, just like I just said. All right, probably going to have trouble getting up above. This is right where the 68.3 Laplace is on the weekly. Where's the 68.3 Laplace to the downside? 37.3, but look at where the first standard deviation is, 35.2. 35.4 is where the weekly S1 is. We could have a nice range right in here all week. Wouldn't surprise me at all if that's what's going to happen. Because it does, the weekly price action volatility ranges definitely tell me it's going to be ranging, probably not going to trend. Tell you what, a lot of people are getting wrecked out there. I'm trying to warn people, tell them about the scam that's going on. Stop using leverage, please. Don't make it even harder on yourself. People are already out there trying to trade this volatility and they don't have the right tools. Add leverage into it. That's like throwing gas on a fire. You're going to lose. You're going to lose brutally, right? We're just, unfortunately, somebody got liquidated that we know. It's like, you can't make this shit up, man. I mean, I'm sorry. I'm sorry that happened, but it's like we're giving people the tools to make sure this does not happen. There is absolutely, I don't care what excuse you give me, it's bullshit. There is no damn reason why you should ever get an account liquidated. Do not be emotionally attached to your trade. Take your profit and limit your loss. If you limit your damn loss because you're not emotionally attached to your trade, how in the world are you ever going to get liquidated? Makes zero sense, right? I mean, it should not happen, but it's happening. Follow those 3 rules. You could have your pet monkey picking your trades for you, and you're going to end up winning. You're going to be a winner at the end of the month. Guarantee it. Get your pet monkey and throw darts at a dartboard. Red, I'm going short. Black, I'm going long. Oh, monkey, bad dart. Okay, let's get out of the trade. Oh, monkey, good dart. Hey, I'm going to take my profit at this price action volatility range, or I'm going to take my profit at this distribution level. How can you not win? It's people get greedy. Taking profit is the hardest thing for people to learn how to do. Yeah, P-Funk's on it. It's the hardest thing. Taking profit and being able to take a loss and not get rattled by it. But what do? You're emotionally attached to the trade. So you're like, no, well, I bet this price action bounces off this yellow 21 here, or this 55 length exponential moving average, or it's definitely not going to break below the 200. Oh, it broke below the 200. Now I lost. Now I'm going down to get liquidated. Just get the hell out of the trade, man. Take your loss, learn to fight another day. Get the right tools. It's all about getting good entries, all right? If you get good entries, everything else will take care of itself. You got to start building up the confidence that way of trading is going to make you money. People just don't understand that, but I understand a lot of people they can't sit in front of a computer 6 to 8 hours a day in a intraday trading session. Well, if you're not doing that, man, you don't always have to be in a trade, right? Say you're off on Wednesdays and Thursdays. Sit in front of the computer, trade on Wednesdays and Thursdays. Don't just get in a freaking swing trade and set a stop loss, because you're going to get knocked out of your position, especially if you're trading with Bitcoin. These days, hell, traditional markets too, man. It's pretty crazy. And if you're really that hard up, if you want to be if you don't want to have to check your trades maybe just once a day, dude, learn how to trade options. Save yourself a lot of heartache. I mean, if you're buying premium, the only thing you can lose is the premium, right? I mean, all you got to do is have a little bit of a bias. If you understand volatility and you understand how to correlate volatility to price action, you're going to be a winner most of the times. But when it comes to options, you have to learn how to protect your profit and cap your risk. That's all you got to do. That's all you got to do. I know I make it sound easy. Trading is. People complicate it. People complicate it big time. The main reason is they're not using the right tools. They're being misled by YouTube Jimmy, right? It's incredible. It is. It's incredible. And boy, did I give them shit in the last stream, did I not? They're all scammers. I don't care who it is. Right? Somebody was asking me, well, who's on the top of your list? I was like, there's no list. They're all scammers. They're all in together. Go to any one of their YouTube channels and look at all their links that they have to unload people into bullshit programs, psychology books, exchanges offering leverage. I mean, it's incredible. These people, that's how they make money. People are like, oh, this guy, he's a great trader. They're not making money trading. They're making money off of you. You knuckleheads. Figure that out. You're giving them clicks on YouTube. They're getting paid for it. You're buying their stupid traditional technical analysis programs, which are bullshit. You're buying their trading psychology courses. Total bullshit. It's all a scam. 100%. Figure it out, people. Figure it out. Now, that I'm done with that little rant, let's get my main trading chart up. All right. Oh, let me read all this. I'm going to get to you, Seiran. Yeah, for sure, P-Funk, 100%. So Seiran, like, say I wake up in the morning and I get a new 4-hour candle at 8 a.m., right? So say my intraday trading is going to be from 8 a.m. to the close at 4 p.m. I'm going to look at the 4-hour chart. I'm actually, the previous night before I go to bed, I'm going to be looking at that 4-hour chart. And as soon as I wake up, I'm going to pop right back on it. It's going to give me a little bit of a bias where, like I've said before, if I say I have 3 Bitcoins in my account and my bias is to the downside, when I take my downside volatility trades, I'm going to use the full extent of my account, all 3 Bitcoins, 0 leverage. If I'm going to counter trade that bias I'm getting from the 4-hour, and I'm going to take a scalp to the top side, a volatility scalp to the top side, I'm only going to use 1 Bitcoin. right? Because if that trade does go against me, which those counter trades are the ones that, if you are going to lose some of those trades during the day, it's going to come from those. In my opinion, that's where those losses are going to come from. And this is where people, they have the hardest thing. Look, you're actively in an intraday trading session, right? And I'm even getting more bias on the 90-minute, the 45, and the 15. I'm getting my entries on the 5-minute, right? And it's quick. That's why I have my charts set up the way I do. And to be honest, I'm bouncing between this chart and this chart, right? That's all you have to do. Boom. You're going to get your entries down here on the 5-minute. You go down here. You're going to get your entries down here on the 5-minute, big time. And then I'm going to be over here. As soon as I get that entry, whether it be counter to the top or with the trend to the downside, I'm taking profit either at these price action volatility ranges or distribution levels. So yeah, you're right on it for sure. Let's see here. Let's go to this 4 hour. Let's see how this thing's going to end up. Now, I was noticing this. Okay, when Bitcoin ran up here on the 4 hour, we dumped out, right? We're below that. You can see the reverse fissure right now, or the reverse wave trend just crossed down the fissure. Okay. Look at this entire move. There's a bunch of bull div building on the log return Z-score right now on the 4 hour. Doesn't surprise me at all. We're getting this last 4 hour candle back up to the top side. Where's it at right now? It's getting stifled as we speak, right at that 9 length variance log moving average. All right, right there. We wicked up above it again, whoop, pulled back right below it. So if Bitcoin can close above this 9, all these lower lows where it's higher lows on that log return Z-score, right? Right there, boom. From right here all the way down, lower lows, all higher lows. And we had an outlier right here that pushed it down to the 99% confidence interval. Now there is some bull div on the DLP and the Fisher. There is none on the returns oscillator though. And everybody knows the returns oscillator is really the key for me. So if that were to fail and this thing rejects in there and we dump even lower, it wouldn't surprise me. That'll be the bull div that played out. All right, that'll be the bull div that played out. Because you got to realize too, as you're building this bull div and you're getting these higher highs, right? You're getting lower highs on the price action. So what's that do? That's just creating hidden bear. And I've showed 1,000,000 times. That's why if there's anybody out there, and it's always YouTube, dumbass YouTube Jimmy saying, oh, divergence is stupid. Oh, blah, 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 blah. It's like, what is divergence, right? It's literally showing you, especially the divergence between price action and returns. It's showing you an imbalance in the buy and sell pressure. God, we know here at Alpha Trading what's important. And that divergence, guys, I can show you 1,000,000 times over. It's what literally moves the markets, right? When you got one side exerting everything they have to push price action in a direction and the other side is not giving any resistance, dude, that's going to create some major imbalance. They're going to blow their wad while the other team is sitting on the sidelines drinking Gatorade. And when it's time, boom, that div plays out. The other side cannot compete with that move. Happens all the time. That div. So let's see. We do got flat. That volatility, man. Volatility on the 4 hours pegged at 100% right now. Positively correlated. It's down. It's to the downside of the zero threshold though. I mean, you can see the entropy on the 4 hour. The entropy is pulling back into randomness as it's losing correlation to the downside. Literally, the entropy percentile is pretty pegged too. It's at a 0.96. And the correlation is going positive. So this could, if we get this next 4-hour candle coming in a new day and it expands up to 100% positively correlated, we could definitely see this thing right back up here, right back up at about 39.4, about $1,000 above here. Hell, it's trying right now. But I'm telling you, the bears are going to defend going into, especially to the end of the day. They're probably going to defend this daily price action volatility range right here. They want the bears want this data set closing down here by the 68.3, because that's going to put BTC's data set above the new daily price action volatility range. The bulls close up here, they're going to close up above the new daily. Right? Advantage bulls. And that's how it works intraday. You got to take that into account every day. Where are those levels at? Where's the weekly? Where's the monthly? Right? And this is why we trade low time frame volatility. Number one, we know all the macro time frame volatility is above BTC's data set right now. Right? We know that. So BTC's got a lot of work to do. 100%. Let me see here. Let's go back over here. Let's jump on to the 90-minute. Last time frame I'll look at is that daily. I think I already did, but we're going to take one more peek. Not building, there's no div on the 90-minute right now, so this thing's got free range. What's that? Reverse 39. Yeah, it's almost to the bottom. So this reverse wave trend on the 90-minute up here is literally almost to the bottom of that weekly range. Let's see here. But you've got this 9-length variance log moving average. You've got this 33-length variance log moving average. It's going to be just tough enough by the end of the day to close up above those, let alone by the end of the day get back up to this reverse wave trend. So chances are these bears are probably going to win out. I did like that div on the 4-hour, but like I said, it's not on the returns oscillator. It's on everything else, but it's not on the returns oscillator. So got to always keep that in mind. If that returns oscillator on the 4-hour was showing bull div too, I'd be like, wow, man, this thing's got a chance. You know, we could start pushing back up to the 40K level, to be honest. And that's probably, yeah, the reverse Fisher's up above there though, 41.3 on the 90. But you got this variance coming down, negatively correlated. Price action's walking up. Pretty much the volatility's heading positively correlated with a little bit of contraction. Let's see what happens by the end. If this thing can push up above those there, get up around 38.8 or something, you'll probably see this volatility candle expand. And just like that 4-hour, right? You're losing correlation to the downside, coming back into randomness. Entropy has been expanding, positively correlated the whole time too. DLP is a literal wreck. Jesus, look at this thing. Boop, can't make up its mind. It's okay though. No div to either side. No div to either side on the returns oscillator. There was a div on the Fisher. There was definitely div on the Fisher. No div on the DLP, nothing else. Let's see here. Let's go to 45 minutes. Yeah, 45-minute returns oscillator is beginning to turn down with what? Hidden bear div. Hidden bear divergence. Let's see, and it's only on the returns oscillator. But when I say when it's only on the returns oscillator, this is the most important divery there is. Everything else, in my opinion, it's all confluence. That's why, like on that 4-hour, right? All that div is all over the place except the returns oscillator. Right here, it's on the returns. The only place it is on the returns oscillator. That gives me, hey, this thing's probably going to be coming down. It's going to depend on this entropy percentile, though, to be honest. Let's see here. MJ, I see a little message coming in from Victor. So we're significantly negatively correlated here on the 45-minute. The entropy percentile is contracting. I'll tell you what, if volatility comes in right here and entropy actually expands here, this price is probably going to be closing, like I said before, down around this area, under 38 for sure. And the bears, they're going to try to push this thing down, man. They do not want BTC closing up around this daily, like I said before. Why? The only thing that matters is where that new daily is going to be. That's why towards the end of the day, you always see a battle, right? For instance, look at this, right? Look at Sunday. The bulls going towards the end of the day. We're going to close above the new daily. Bears are like, no, you're fucking not. We're pushing price action down right before close. Where did it? Boom. They closed it below the daily. Bulls worked hard though, right? They got a nice push off of the 68.3 down here. But unfortunately for the Bulls, the bottom of the weekly is right above. And the bears use that as a staging point to reject that price action. Same things happen here going into the end of the day. The bulls are like, we're going to close above the new daily. Let's see what happens. The bears are going to fight back here, man. They do not want that to happen. There's no doubt. 15 minutes probably going to give us a better look here. Yeah, not good. Right? What do we got here? Shitload of bear div on the 15. This whole walk up on the 15-minute right now, where's it at? 99 length variance log moving average, rejecting off of a bunch of bull div, returns oscillators below the zero mean. So, ding, ding. Even though, is there any bear div on that log return Z-score? No, it's clean as hell. Is there any on the Fisher? Nope, real clean. What about the DLP? None. Look at the returns. Ugly. Ugh. 15-minute. Entropy percentile. Contracting, heading into positive correlation. Look at the entropy itself, losing correlation to the top side of that 15-minute move, going into full randomness. Full randomness. If this goes into significant positive correlation and this historical volatility Z-score heads down, another reason to see this price action plummet. This is right now though. So there's a battle going on. The volatility is expanding, positively correlated, actually just crosses zero threshold. If this Gaussian mean can hold price action, good. If not, look at the band down here, 37.5 is the 15-minute. 37.5. Right? It's right down here, literally at about the this was the first standard deviation to the top side on this last 4-hour candle. That's literally right below it's that area, that 15-minute deviation band. And here's another thing too. This last 4-hour candle, you literally have the second standard deviation normal distribution, the 95.4 Laplace distribution. Tried to get a 15-minute candle below it. Whoop, there's a 95.4% chance this price action closes this last 4-hour candle below there. That being said, it wouldn't shock me at all to see this thing could literally by the end of the day be back down here by the daily S2, down here at about 37 area, right? And that would be at the bottom side of the 4-hour 68.3. Got that to look forward to, bulls. Bulls, and here This 15-minute candle closes below this Gaussian mean. This baby's gonna rip down probably. Let's see. I said, why? Well, you got a bunch of bear div between returns and price action. And I just showed how. Whoa, yeah, got rejection off the 99. Oh shit. Buddy's picking me up Chick-fil-A. Fuck, that's the last thing I need. It's hard enough being 52, trying to keep my shit together. Dude's feeding me fast food. What the fuck? Chicken. What are you gonna do? Buck, buck, chicken. Let's see. Time is it? God, man, I've been rambling. Well, I guess we're about done anyway. Can I take a peek at? I'll tell you what, I'm gonna do a little special sauce. Let me pull up. Let's check out this buy and sell pressure. All right, good dog. Go lay down, man. Go. Pretty interesting. Pretty interesting indeed. That's why we're getting that discrepancy on the 4-hour with that divergence, right? It's not showing on the returns oscillator, but everything else, you got a little more sell pressure than buy pressure. Look at the velocity and the acceleration of both though. They're both to the downside. They're both to the downside. Number one, that's why there is no bull div on the returns oscillator. If this velocity and acceleration on this sell pressure was to the top side, like this candle, I guarantee that returns oscillator would have a bull div too. And we would be seeing this price action probably making a run for 40K. Not happening. See a 90-minute here. Yeah. So let me see something. Let's go to the 90-minute real quick. I'm surprised this returns. I'm surprised we're not seeing any hidden bear, because the velocity and acceleration was for all that buy pressure where the sell was to the downside. That usually is going to create it. So not anything else. Not really, man. Not really. Huh. Yeah, that's why I'm the 15-minute, right? It's kind of meek through here, but that candle right there, I mean, that was really creating it. All that bear div that's on the 15-minute. Yeah, this baby's coming down. This puppy's coming down, as we see. Yes, I want to leave. All right, guys. So anyway, YouTubers out there, clown world, how are we? Hopefully I shed a little light on this shit show. But if you are watching this, you're welcome, Sarah. If you're watching this for the first time, we are Alpha Trading, and we trade volatility, probability, and statistics, and we love to teach people to do the same. The link to our Discord is in the description of all of our videos. Come in, check us out. Look in the shop channel. There's 2 different levels of our Discord, right? That gives you access to the Alpha Trading system. Open up a support ticket. Tell us what's on your mind. You can ask any questions you want. We're a friendly crew, right? In the future here, we actually might be restructuring things a little bit to get access to that Alpha Trading system. They are going to be attached to NFTs. So that's going to be interesting. But yeah, guys, I want to thank you for watching live. That's another bonus to being in our Discord, as you get to watch these live streams as they are happening. And wherever you're at, in this big, beautiful blue marble, have a wonderful rest of your morning, afternoon, or evening. I'll see you tomorrow, 2 p.m. Pacific Standard Time. See you guys.